Get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
The Kospi seeing some bit of profit booking in today's session after the recent outperformance, 0.4% lower there.
The president can simply provide these countries with a deal if they refuse to make us one by the deadline.
JSW Paints will go ahead and acquire the entire stake of Akzo Nobel India. The promoters were looking to sell, the foreign promoters, and that exactly seems to have happened.
Let's actually start with the paint stocks. Let's look at what color they're choosing. Asian Paints is flat. Let's pull up Akzo itself. Akzo's at 32.10.
Today also we're managing to hold on to that green, broader end of the market doing well.
Rajiv Anand of Axis Bank, he has about 35 years of experience in the financial services field.
Competition will be intensifying a bit, between Birla, JSW plus Akzo and Kansai.
Approximately 3% away from its all-time high of 26,277.
Well, that was the day so far. Hello and welcome to Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. We have Ekta with us, Mangalam, and myself, Nigel, as well for the next 60 minutes or so. Hey, guys, not a bad start to the series, right? We ended the June series with a bit of a flourish, and you'd like to start a new series, with some gains, and that's precisely what we're seeing.
Yes, we are seeing that gains. Hi, Ekta. The Nifty Bank, it did very well yesterday, saw a bit of a dip today, and it recovered from there, and the broader market's doing well. That tells you that all is well with the market right now, so far.
In the pink of health.
In the pink of health, yes, Ekta, please go ahead.
Absolutely, it is the pink of health today, and we're ending the week on a positive note if we do close in the green, which is very, very likely now. It's going to be the second consecutive week that we're going to close in the green, so we've got that momentum back. We've seen that the India VIX is down around 8-odd%, 9-odd% on this on a week-to-date basis, and we've got the small caps which have rallied as well, around close to 4-odd% already this week. So that gives you a sense in terms of the kind of momentum that we've seen this week, guys.
Well, that's right, Mangalam. And the big deal as well, we're going to discuss in further detail. We'll get to that in just a bit from now. But for the time being, let's get a quick check on how do you position yourself. Mitesh Thakkar is back with us. Mitesh, early morning, you got a bit of a pullback, very, very wee bit of a pullback. That dip quickly got bought into, and the markets are back at the high point of the day. And I wanted you to tell us not just about the Nifty, but the role of Reliance Industries. Because that, in fact, is the absolute opposite of what it was doing in the previous 6 months. The last 6 months have belonged to Reliance Industries. Where is it headed from here?
So, Nigel, good afternoon. I think Reliance is something which will lead. I think the banks which have done outperformance are now getting back to their normal performance or mild underperformance, and stocks like Reliance, which have slightly underperformed. If you look at the markets 3 months back, I think those are the stocks which are catching up. So Reliance, I'm very positive upon, looking at a target in excess of around 1,600 over here. And even on the trading call side, I have a buy on Geo Finance with a stop at 316 for targets of 340. And the other one is buy on Bharat Forge, which I would recommend buying with a stop just below 1290 for targets of 1350.
All right, and since you spoke about Reliance and the conglomerates doing well today, we have the Adani Group stocks as well, which have been well bid in trade today. Adani End, for instance, is up around 3.5%. We're seeing some traction in names like Adani Ports as well, holding up with gain of about 1%. And Adani Total Gas, which is up around 6%, so is Adani Green. So the entire Adani pack is moving. Is there anything that stands out here which is tradable, Mitesh?
So I had early in the day buy on Adani Enterprises, but the one which I like very strongly post that is Adani Ports. I think, a stock which had a very strong uptrend and then came down to its medium-term average around 1340, 1350 zone and has bounced back. I think as long as the stock is above levels of 1420, good chance that it will see 1500 to 1530 very soon.
Okay, well, let's in fact get to the top story that we're tracking today, or at least one of the top stories besides paints. It is IndusInd Bank, which in fact may get a new CEO soon. Sources tell CNBC-TV18 that there are 3 candidates in the reckoning to lead the bank. Ritu joins in now with all of the details and all of the details that she's picking up from her sources. Ritu, over to you.
Well, thanks for that, Ekta. Yes, we do understand that there are three strong contenders that have emerged that are being actively considered by the board as we speak. Rajiv Anand from Axis Bank, Anup Saha from Bajaj Finance, and Rahul Shukla from HDFC Bank. Let's start with Rajiv Anand, where he's got more than 35 years of experience in financial services. He's been with the Axis Group since 2009 and on the board of the bank since 2013. And as the deputy MD, he led the wholesale and digital banking portfolio. But here's the key detail. He has announced his retirement from Axis Bank, and come early August, he's going to step down, and that will make him available to take charge at IndusInd if he is shortlisted. But our sources also point out that he is indeed a strong contender for the job. Next, Anup Saha, again, 32 years of experience, 25 in financial services, including 14 years at ICICI Bank. He's led everything from credit cards to mortgages, auto loans and structured finance. And very recently, he was elevated to the position of MD at Bajaj Finance, which is, again, a sign of trust that he commands. And finally, Rahul Shukla, 30 years of experience. He began his career at Citibank and then joined HDFC Bank in 2018, where he oversaw the corporate banking portfolio and was now heading the commercial and rural banking division. Currently, he is on sabbatical, but very much in the mix. So, all these three names are under consideration, but our sources tell us the board is looking more keenly at Rajiv Anand and Anup Saha. Now, remember, the Reserve Bank of India has asked the board to submit final names by June 30th. And while the board has held informal discussions with RBI, no names have been submitted formally just yet. Typically, it takes RBI anywhere between 4 to 8 weeks, sometimes longer, to approve the bank CEO name. But this is not your usual case. We've seen a string of top-level exits after the multiple accounting lapses and irregularities that came to light. And so our sources indicate this particular appointment, could be fast-tracked.
All right, Ritu, thanks a lot for that. So this appointment could be fast-tracked is the word coming in from your sources. We heard that from Abhizar Diwanji as well in this case, because they've been speaking for a while right now. Let's get in Mehboon Irani's view on this. Mehboon, thank you for joining in. Welcome to the show. Last week we got one brokerage upgrade the stock after a big gash that we've seen on the counter. Do you think a new leader, and specifically one coming in from the private sector, could change the fortunes of IndusInd Bank, especially at a time when financials are looking attractive, and in that this has seen a big decline from the top? Do you think everything is priced in?
Well, I've tracked IndusInd Bank for the last over 25 years, and allow me to state that I've gone on record once upon a time to state that it is one of the fastest growing banks when Mr. Romesh Sopti was in charge, and he was rated as one of the best bankers by many forums at that time. Now, there are various names circulating right now on the social media as to who the next CEO will be. June 30th is the date. According to what I understand, I always believe that the bank is as good as the CEO. RBI will want somebody who can ensure regulatory compliance and have a governance structure in place. That is certain. The new CEO will have the task of building up the top management team. Now, he will start with a clean slate. And why do I say that? Most of the old satraps, the top management team, have either retired or resigned. There are few in place. Hopefully, they will resign in the next 1.5 years. So no replacement has to be done. He has to set up a new team. But what he has to do first is set up a team, set up regulatory compliance, set up the governance, put it back on his priority list, and then slowly bring the bank back to the growth path which the bank had seen under Mr. Romesh Sopti's regime. Now the question is what happens to the stock? The market, in its wisdom, is looking at the stock with renewed optimism because of the names floating around in the market, most of them with a great reputation. We will need to wait and see as to who ultimately comes in charge. Now, what about the problems of IndusInd Bank? The problems of IndusInd Bank, the report which was placed after the CEO being asked to go away, the previous CEO, Katpalia. Now, that report still has some cobwebs here and there, but there are matters which can be sorted out. There are problems in the microfinance book, but which company in the microfinance sector doesn't have problems? So those problems also are well known to the market. So market says past is past. Now let us look at the future. The bank has a solid base, mind you, built from the previous management of Mr. Romesh Sopti and his trusted lieutenants like Mr. Ramesh Ganeshan. They had built up a solid team. Now that team, most of the people have gone, but the base is strong. Can the bank come back to its growth path? Answer is possibly yes. So if the market is looking at it with optimism, with a price to book value of just around 1 or less than 1, I think it is well in order. But if you ask me, I would like to stick my neck out after seeing actually who takes charge But one thing is certain, the RBI will insist that whoever takes charge will ensure regulatory compliance and have a governance structure in place, because that is where the bank lost a large part of its goodwill and reputation over the last few months.
Okay, all right. Well, from one particular news break to another, CNBC-TV18's news break has been confirmed. Akzo Nobel India has surged, with JSW Paints set to acquire the promoter stake in a deal which is worth nearly 9,000 crores at around 2,762 rupees per share. Remember that Parth Jindal had in fact told CNBC-TV18 in January that he would give it everything he has to acquire Akzo. Listen in to that exclusive conversation.
I think there's no choice. If JSW and the ambitions we've shown that we want to be a top 3 player in whichever sector we play in, if I have to do that, then I have to give it everything that I've got for Akzo.
How will you fund it?
It's going to be a mix of the family investing, and private equity.
All right, so that's Parth Jindal, declaring his ambitions all the way in January. But let's go across to Rachna now, who's been on top of this story, and she's here to give us the details on it. Rachna.
Right, it is a CNBC-TV18 news break confirmed, and as you said, we started reporting it back in January, following it up all the way till now, when JSW Paints has officially decided to seal this deal and to acquire 74.76% stake in Akzo Nobel India for 9,400 crore rupees at a 2,762 rupees per share. That's a 16% discount to market price, as we had indicated yesterday. Now, sources tell CNBC-TV18 that the deal would be funded through 2,000 crore rupees coming in from equity that the Jindal family has pledged to stake in asset sales, while the remaining 7,000 crore rupees would come in form of debt and structured credit, including financing from global institutions. But before the deal can go through, there are a few crucial steps left, starting with a mandatory open offer under SEBI rules. Any acquirer picking up stake more than 25% in a listed company has to make an open offer to the public shareholders. In this case, JSW Paints will offer to buy 26% more of Akzo Nobel India at 3,417 rupees per share, a significant premium to current market price. Now, post-merger, JSW Paints will have a production capacity between 4,70,000 and 5,20,000 KL per annum, blending JSW Paints' Vasind and Vijayanagar units with Akzo Nobel's plants in Gwalior, Bangalore, Mohali and Hyderabad. The employee headcount is also expected to be around 3,500 people, with an estimated revenue of over 5,000 crore rupees. This is well in line with its FY26 growth targets. With a 9 to 10% share in decorative paints market and becoming the second largest in industrial coatings, this move will make JSW Paints the new number 4 player in India's paint landscape. So a transformative step, but a bold bet by Parth Jindal to build what he calls the paint company of the future.
Okay, all right. Thanks a lot for that, Rachna, and congratulations on that solid story as well that you put out first here on CNBC-TV18. Well, Mangalam, you want to weigh in terms of quick analysis on it?
Well, the deal has happened, but I'm looking at all the other paint companies. Typically, what happens is when a conglomerate gets in, you see, and that's what we've seen in the likes of all the other players as well. When Birla's announced, we saw a big gash in the paint stocks, etc. What is it that is happening right now in the paint stocks? Why are they buzzing as against, earlier? The first one is that the deal is done without any major price war amongst players. Multiple times there have been reports that, Berger was in the fray. At some point, Asian Paints looked at it. Then you had, even something like a Pidilite or an Indigo looking at it as well. But all of them have chosen to pass on due to valuations. And despite that, JSW Steel has gotten at a 16% discount to the previous close price, which tells you that there was no major bidding war. Secondly, competitive intensity. Now, that everyone is familiar with. Why? Because it's not a new player. JSW Paints has been around, Akzo Nobel has been around, so they know the strategies. And at the same time, even if they had to amp their strategies up a little bit, these companies have learned how to navigate through a competitive period, with Birla Opus coming in the last 4 quarters as well. The third part, when the demand environment is improving, the incremental share or sales is increasing, anyone eating into incremental market share does not worry the incumbents as much as against, earlier when Birlas came in at a time when demand was slowing down. So the incremental share went to Birlas at the cost of others. So in this case, if the industry is likely to grow, FMCG companies have called out an improvement in demand environment. We heard Berger Paints today as well. We'll play those bites shortly. They're saying that industry demand has improved in June. So on the one hand, everyone's navigated through competition. There hasn't been a major price war. Thirdly, demand is improving. The fourth most important factor is crude. It's below $68 per barrel. Geopolitical tensions have eased. So you have enough elbow room on your margin front as well to go ahead and compete even if the industry is seeing competition. But above all of that, price. Once the Birlas entered the fray, all the paint stocks were at a record high. Now from 52-week high, we've seen a big cut. Asian Paints is down about a third. Berger Paints, which has done an outperformance, is still down about 10% from its 52-week high. Kansai, Nerolac, Indigo, AkzoNobel, all of them down anywhere between 28 to 30%. And the valuations have come off as well. So this is the reason why, despite this deal being announced, we haven't seen all the other paint companies or all investors looking to sell other paint companies because they believe that this is something that they've been able to tame before, and now it's all in the price.
Well, that's right, Mangala. But it appears it's a win-win-win scenario because good for JSW because they're expanding scope. Akzo wanted to get out, so they seem to have got a fairly okay deal. And Asian Paints is high by 2.5%, telling you that they don't believe there's going to be any kind of big threat because it's already, players that are in there. But Mangala mentioned that, we...
Just another word on Asian Paints as well. The stock has been an underperformer. The other thing was the supply overhang. Big 5% equity that Reliance had to sell. That is out of the way as well. So that is another positive. The only thing we'll have to watch out for from here, how aggressive will the JSW group be in the market? Because, for them, Rachna had pointed out that 2,000 crore is what they will put in terms of their own money. The rest will be structured debt. In the paint industry, everyone else has a very strong balance sheet. So if they are entering the paint industry with a balance sheet debt of close to 7,000 odd crores, including the debt that they have on their books already, then will they have enough elbow room to go ahead and muscle through a price war or no? Something we'll watch out for.
But in fact, we had that interesting conversation with Berger Paints. We spoke to Abhijit Roy and he said that it's business as usual. But let's listen in to what he had to say and decoding this entire deal and what it means for the paint industry. Listen in.
Changes much, because these two players, as you rightly said, have been there in India already. Both JSW and Akzo have been operating in this market. We are more or less aware of their strengths and weaknesses, and we know what they are doing in the marketplace. So it's just a change of hands, possibly a change, in the management style that it is operating in. So from that perspective, there might be some small changes, but overall in the industry, nothing changes much. What does happen is that, there is a consolidation which is happening now. So there are now, 5 players in the industry. The top 2, Asian and Berger, remains. The 3rd, 4th and 5th position is up for grabs. And that's where the competition will be intensifying a bit, between Birla, JSW plus Akzo and Kansai.
Maybe this disruption, as you mentioned, is perhaps, one good indicator that, Indian consumption story is pretty much intact. Yes, there are new players entering, and, for any segment, when there are new players entering, there can be some sort of a, market share, grab kind of competitive activities which plays out and which is pretty normal. Paint as a sector, as you mentioned earlier, I think consumption play is pretty much, the core story. We have a nice combination of, whatever I say, house durable, the house paints going on, maybe infrastructure is improving. So paint is structurally a good story. Competitive intensity can, decide a little bit shift of market shares or, margins, profitability, etc. But that does get, captured in market valuations.
It's going to get very competitive. We recently, and Jindal is an aggressive group. May not be great news for Asian Paints from a competitive intensity point of view, but overall from a sector perspective, it shows you that the prospects are pretty bright. So I think it will create more competitive intensity. Good for consumers. May not be that great news for all paint players in general.
Right, good for consumers, may not be as good for paint players. Well, the street doesn't seem to believe so. We are seeing some shares of the paint companies being bid up. Let's bring this back to Mehrbun. Mehrbun, you spoke about IndusInd Bank. I'm sure you've been tracking a lot of these paint companies as well for a while. There has been disruption. There is now more disruption in terms of existing players consolidating. Do you think it's a good time to buy some of the paint companies, or you will still wait until the dust settles here?
No, I think my answer remains the same for the last 7 years at least. On your channel, whenever I come, I mention that they're great companies, no doubt about it. Be it Asian Paints, be it Berger, be it Kansai, be it ExxonMobil, great companies. Having said that, the fact remains that I've also stated that if you're asking me from an investment angle, the answer is clear-cut no. If I have my brother working in that company, I will say my brother is working in Asian Paints or Kansai. That's a different issue. On the stock price angle, again, the answer is clear-cut no. Look at the growth that these companies are attaining. The incremental demand is coming. I'm not saying no, but the capacity has also gone up, and so has the competition intensity. Now, in the midst of all this, I think I heard you stating that the stock prices have come off nearly 20-30%. That's a positive, no doubt about it. But at the end of it all, even today, the valuations are expensive. There were times where I've seen stocks in this sector quoting at 60 and 70p. Now, if one starts imagining that stocks will go back to that P, I think one should go and fly a kite. Even at the present valuation, despite the fall in price, I don't think it's too much worthy to go and invest in these stocks. They're great companies again, but not worthy of investment. The competition is too severe. Oil prices come off sharply. Margins may improve. Is that reason enough for a lag up in the stock price? Maybe yes. So there could be a small rally because the stocks have corrected enough. So I'm not saying one should go ahead and sell off in a hurry, but to put in incremental money right now and expect anything more than a 5 to 10% rally is something which I don't think will happen.
Okay, well, yes, absolutely. One of the reasons possibly why these paint stocks have seen a fillip is because crude prices have declined for the first time, largest decline at least for in the last 2 years on a weekly basis. That's what it's set for. But nonetheless, Mehrbun, let's move, or rather let's stay in the same realm and talk about what you do like in the entire FMCG space. Anything else in terms of a pocket that you would probably look at?
I would say that the entire FMCG space has come to a level where, you remember the time when the budget was presented, more money was put in the hands of the consumer, and the way the market gave a thumbs up to most of these FMCG stocks, thinking that demand will pick up. And now everything is petered out. The stocks have come to levels where you feel nice to buy them, own them, and feel that, okay, I will not lose money from the present levels. I think that is where the FMCG stocks are. And with hopefully a good monsoon around, rural demand picking up, I think quite a few of these FMCG stocks may end up seeing a higher price than seeing a lower price maybe 3 or 4 months down the line. That is the only way I can possibly talk of this entire sector right now.
Okay, all right, Mehrbun, always good to hear your thoughts. Thanks a lot for joining in and filling us in with all of those details. Well, for the time being, before we go to that break, just take a look at all these crude sensitives. They're on fire. OMCs, HPCL is now at the high point of the day. Big move out there. One of the factors that are helping the paint companies as well is the lower crude oil prices. And that's why you have a lot of these players. So for ONGC, it's actually a negative. For, the OMCs, pull them up. HPCL, BPCL, IOC, all of them are doing quite well. Paint companies and FMCG companies as well doing quite well. So good going on that front. Crude oil prices cooling off, good for the economy, good for the markets as well. Well, we'll slip into a short break. On the other side, Sanjay Parik is waiting for us to give us his take on how does he see the market shape.
Welcome back. Well, steady day for the markets. 25,630 is currently where the Nifty is at. We've got a good advanced decline ratio on our hands as well. That is the HDB Financials IPO update. So the subscription for day 3 is on your screens. But nonetheless, let's get talking about the markets. We have Sanjay Parik, founder and CIO of Soham Asset Managers, who's joining in now. Sanjay, hi, welcome to the show. Well, we seem to have got our momentum back this week. Do you think that we've, shrugged off the geopolitical concerns and now we're probably going to see a new leg of an upside for the Nifty? And if so, what are the targets?
Yeah, I mean, one thing is, of course, the risk has reduced globally, but, valuations are not cheap. So as the market rises, it gets tough for us because we are value seekers. Our strategy is growth at reasonable price, and now there is growth, but not at reasonable price. So we need to dig hard and look for ideas. There are ideas, but we really have to dig hard. On markets, on a top-down on Nifty, if you go by consensus earnings, even on 27 at 1300 to 1320, we're not cheap at around 19 times. So we need to be cognizant of that, and certainly be stock specific. But our point is that we need to have much higher margin of safety, be it the market or the stocks.
All right, with the market. You said that you got to dig hard, but there are some ideas. Can you throw some light on where these ideas are, and if you can take some names specifically, some sectors, narrow it down for our viewers?
Yeah, so I'll tell you, we just discussed in our team that, there will be ideas even larger cap and mid and small cap space, and we just have to dig them hard. So, last 2 months back, we bought Sirma in the EMS space. Earlier, Polycap was also at a good price. We used to own InterArc, and we recently even increased that further. Or a pump company recently, we just got listed, Oswald Pump, we added. So there are ideas, and these are all reasonable valuation, high growth, high ROC, high ROE, which works well for us, and reasonable on valuation. So it's just that, as I said, there are opportunities, not enough, but one will have to dig hard and look for them.
Hi Sanjay, good afternoon, good to see you in. Not going to talk about metals today, but what about the paint industry? Mangalam has been analyzing all through the day the big deal that's been announced. A smaller player got bigger because they've taken over AkzoNobel, and then we have the JSW Group parentage as well. How do you see things shape up out there? Today you have a big deal that's announced, and it's not just the one that's part of the deal. The entire sector is higher. It's been a big underperforming sector, by the way. But would you look at getting into any of them?
Yeah, so Nigel, certainly you all have covered it very well today. So I don't know how much value I can add, but I'll just tell you how we think. So competition is going to remain intense, So you have Grasim as a player, and we own that. Who is not going to sit with the market share it has today? It's a huge, if you take the capacity share, it's pretty large. So I think that intense competition will continue. This is one good consolidation, and the overall demand is yet to recover meaningfully. You got 1 month doing better, but as you can see, you take any parameters, still the slowdown is persistent. So I think the implied growth in Asian Paints has now come off quite well. So earlier, and we look at DCF for such companies, and in such companies, the DCF implied growth was coming at 17-18% long term, while they've not done in the last few years. Now it's come off quite well. So at the point, we certainly are on a watch. We don't own it, but we certainly will positively look if, the leader, Asian Paints right now, we can look at adding at a price. But we're not at it yet, as yet.
Okay. All right. Well, Sanjay, the other bit of news which was that IndusInd Bank could probably get a new CEO. What's your take? Do you think that there's a long road to recovery there, but it could start with a change in the management?
It will be according to me, it is a very, very big positive. First, all the three candidates are very good. Be it governance, their own pedigree, the track record, where they work. So it's going to be a very big positive according to me. Secondly, I don't think further cleanup is required. At least I have that view. We own a bit. So if you take the book value, coming to the back to the book value, last 25, we ended at around 820 rupees. I could be off a little bit. Even if it takes a slow recovery, this year, let's say they end at 870, 880, and then the new person who comes in gets holds of the grip of the whole bank and gets back to growth. And then we're talking of book value at 970, 980, which will have maybe ROEs of 12, but could look better in 28. Now, that is where the re-rating can happen because it's the fifth largest bank and it will instill a lot of confidence to shareholders, employees, but also the deposit holders. So I think it's a very big positive. RBI has been very, very supportive, of course, on the backstage. And once the approval comes, I'm sure this will, the worst is behind for IndusInd Bank.
Sanjay, you spoke about, entering Syrma SGS, you having looked at Oswal Pumps as well, perhaps entering that too, and looking at Asian Paints right now, as you believe that, valuations have become a little more attractive than what they were earlier. Yeah. Where have you sold or lightened your positions?
Yeah, so, we have a very strict price value equation that we have. So we have from each of our companies, the value that we have for 27, and at times price have moved up quite sharply. So even in cases like we've discussed today, we would have trimmed our exposure, not Oswal, but in Syrma also where our weight was very high. So in certain cases, we do trim our exposure, but our core holding remains. So that is what we're doing that, in one of the real estate exposure we have again, which we like. So we want to have a core holding, but you can always trim a bit because that's important because when you have bad times, you do get a time to look and increase our exposure and volatility is quite high. So, as I said, we have a strict discipline that if the price far exceeds our assessment of value, we certainly will act either completely selling out or at least trimming a bit. And that's what we've done in a lot of stocks.
Any defense stocks that have trimmed a little bit? We have some news flashing on the screen. Mazagon Dock, they have they've approved the acquisition of Colombo Dockyard PLC for approximately 452 crores. Talking about trimming down, time to trim or defense, or you want to go on the offense on the defense stocks?
We missed it. We missed the defense rally directly. Of course, if you take a part of Larsen and Toubro, it's a very small part. So that's how we own it, but otherwise, direct exposure to defense, we missed it.
All right. Thanks a lot, Sanjay, for joining in, filling us in with all of those details. Wishing you a good Friday evening, solid weekend ahead as well, and we catch up soon. Well, that piece of news actually on Mazagon Dock has excited the stock. It's now moved to the high point of the day. Of late, any kind of positive news with sort of, shipyards, defense, stocks have just been flying away. And that's what's happened yet again. Well, time to slip in a short break. On the other side, Nimish is waiting for us. He'll tell us what he's picking up in D-Straight Chatter. We'll also get the technical calls from our experts. Welcome back. Markets in a good place. Starting off the week with a 90-point gain on the Nifty. So that's looking good. The Nifty Bank as well. Now it's catching up. It's up close to 230 points. In fact, the Nifty Bank is outbeating what the Nifty is doing in today's trading session. A couple of stocks on the frontline index itself. Pull up Nestle as well as Sun Pharma. Both of them were not participating earlier. Now they seem to be getting their act together. Both of them at the high point of the day. But it's that time of the show when we go to D Street Charter. Nimesh joins us to tell us what is he picking up. Nimesh, yesterday it was an expiry-related factor, so a good close to the series. Started off a new one, that too on a positive note. Tell us what are you picking up?
Absolutely strong day for the market. Strong day for the markets, and again, the broader market seems to be outperforming. There is a lot of momentum in the broader markets as well. And again, the sense is while the flows are mixed with a positive bias, there is a bit of momentum back in the PSU basket. So the entire PSU names are buzzing. And within that, there has been a feedback for the last couple of days that there is institutional buying in the OMC stocks. So that's clearly showing up the kind of move you're seeing in HPVP and IOC. But today I understand there is a bit of follow-up buying from larger HNIs as well into the OMC names today. So that explains a big move in the likes of HPCL. As I said, the momentum clearly seems to be with the broader market names. And also, Nigel, the other feedback is that come July 1st, the supply of paper will stop because of the trading window getting closed. And post that, there is a hope and a feedback that maybe you will see further momentum in the broader market because the focus will shift to the secondary market stock. So that's the sense, and that explains for the last couple of days the broader markets, the mid-cap, the micro-cap stocks are relatively outperforming. So that's the overall sense. But clearly, the flow seems to be with the PSUs, and the momentum is clearly there after the big breakout that we've seen on the Nifty and the Bank Nifty.
Okay, all right, Nimesh. Yes, absolutely. Good momentum coming in for the markets. Well, we do now have Mitesh Thakkar who joins in to tell you.
No, I think let's go to Nimesh actually first because he would like to give us some interesting
stocks.
Bits on the stocks.
Sure. Nimesh, go ahead. My apologies.
No problem. So the first stock on my list is 361 VAM. That's been consolidating with a positive bias of late, but I understand a very large long-only fund has been an active buyer in 361 of late, so that's the first stock on my list. The second stock is GMR Power. That's been buzzing in trade, good volumes as well. There is a large block, 1 crore plus shares got changed hands in today's block deal. I understand some large influential HNI investors bought in today's block deal. So maybe if there is a disclosure, that could be an interesting thing to track in GMR Power. The third name is Lloyd Enterprises. Again, a small stock within that Lloyd group, but that's been buzzing in trade today, up 10%. Volumes has also picked up as well. And in Lloyd Enterprises, there is a sense of some corporate development happening very soon. So that's the reason why that's buzzing in trade today. And the last one is IDBI Bank. I spoke about the PSU basket doing good. IDBI Bank stands out because of very strong buy flow. So again, looks like some large HNI investors are positioning again in IDBI Bank for a potential deal. So that's the reason why even IDBI Bank is buzzing in trade today.
All right. So those are a couple of stocks that Nimesh has gotten us. Now let's go across to Mitesh. Mitesh, what should one buy today for a reverse trade on Monday?
Yeah, I think the tire stocks are doing well. MRF has had a rally. Balkrishna is just trying to catch up. So Balkrishna Industries is a BTST. Keep a stop at about 24.45 for a 24.85 kind of a target to begin with, and then maybe even higher levels can be tested. And the other stock which I like, which is on the sell side, is CG Power, STBT, with a stop at 676 for targets of 660.
All right. Mitesh, just a word on Page Industries. It's been a big mover this week. There was a brokerage initiation that happened as well. They were hoping on the outerwear business of the company doing a lot better, them opening more exclusive brand outlets, etc. as well. But just from a chart check standpoint, it's a 50,000 rupee stock now. It's crossed that 50,000 rupee mark on an absolute basis. Page Industries seen a big move. A large part of that coming in just the last 10 minutes or so.
That's right. One, it's breaking into all-time highs. We also had a trading call, I think, yesterday on this one. A very good pattern, what a chartist will call the cup and handle pattern, giving you a target of around 55,000 plus. So if somebody's bought it, hold it. In case you get a decline or pull back to about 48,500, 600 zone, that's your entry.
Okay, all right. We do have Petnet LNG, which is in focus after a brokerage. ICICI Securities has upgraded the stock from sell to buy and has raised the target price to 330. Sonal joins in to give us more details on this. Sonal, over to you.
Petronet LNG, that is stock in focus today. There is an interesting note coming in from ICICI Securities. As you said, the stock has been upgraded to an add from a sell. There are a couple of reasons why they like the stock. They met the management and they think the prospects for the company for FY26 to FY28 are great because of three reasons. One, LNG prices are expected to moderate. There is expansion at their Dahej terminal that will happen by first half of FY26, and the completion of the Kochi-Bengaluru pipeline that will happen in this calendar year itself. There are concerns, of course, around the return ratios from the Petchem project and also the visibility on the Gopalpur terminal. That is something that they are watching out for. However, they have revised estimates to factor in 7% EPS CAGR over the next few financial years. And on the back of that, they have upgraded the stock to an add from a sell and raised the target price to 330 from 250 earlier.
All right, that's about Petronet LNG. But Sonal, GAIL also in focus after a note coming in from Jefferies. What is it that they're saying?
So GAIL is well in focus. You remember, GAIL is always in focus whenever there are revision in tariffs. And there is one tariff which is expected to come in from the PNGRB, which is the unified tariff. A board meet is expected to come by very soon. And that is where Jeffrey says it could be a game changer for GAIL. Remember, GAIL had filed for 33% increase in unified tariffs to around 78 rupees per MMBTU. While Jefferies expects a 10% hike, GAIL expects it to be around 20% because there has been a reduction in the capacity of the unified pipeline by 6%. So if there's a 10% tariff hike, it could increase their EBITDA by 13%. If it's 20%, their EBITDA could increase by 26%. That is for the transmission segment itself. The return on capital employed, that would improve to 10 to 12% on calculated basis from the 8% mark currently. And if this actually happens the way GAIL has requested it to be, it could lead to a 34% hike in their target price as well. They maintain a buy rating on the stock, but this will be the key thing to watch out for GAIL going forward.
Well, thanks a lot for that. So now let's focus on Dixon Technologies. That one is higher in today's trading session. A couple of brokerages have written on the positive aspects post the recent correction, Nomura as well as Equirus. Upasana joins us to fill us in with some details from the Nomura note. Upasana, take it away.
Well, certainly it's a story of two tales when it comes to Dixon Technologies. Mind you, earlier this week, Phillip Capital has given a sell rating on the stock with a target price as low as 9,000 per share. But Nomura this morning has maintained its buy call with a target price of nearly about 21,500 per share. Now, the brokerage says that the mobile EMS industry is likely to be divided amongst players, but Dixon continues to command the largest share amongst these. Now, when it comes to in terms of client addition, Dixon has been ahead of peers in terms of adding more customers. This offsets the risk of weak demand from any single customer. In the near term, Dixon's export sales have seen a meaningful pickup, and on the back of this, it expects the export ramp-ups also to be on track for this year. Dixon's Motorola client, which is the largest client, their monthly revenue run rate has also seen a pickup in the past few months is what they are highlighting, and it expects the Motorola volumes to ramp up from 11 million in FY25 to 16 in FY26 and as high as 18 million in FY27. Overall, it maintains estimates of 45 million units in smartphones, excluding Vivo in FY26 and 64 million in FY27. And to sum up this, it believes that the ramp-up in volumes and also company's announcement on its new partnership with various clients can be the share price catalyst going forward. Hence, it is given a buy rating with a target price of 21,409 per share.
All right, take that point, Upasana. I know that's about Dixon Tech. It's off the highs right now, still sitting with gains. Just keep an eye out on Bharti Hexacom. It's a big mover. It's 10% higher right now. It's done well, but not as well as today in this entire week. It's been flattish for the week, but up 10% right now. Bharti Hexacom is the stock that we're looking at. And giving the company on the way up, a bunch of stocks are spiking right now, actually. We, looked at Page Industries, but look at TBO Tech, Suzlon's moved to the high point of trade. Hyundai Motor itself is higher. So there is a fresh wave of buying in a lot of these names which are doing well. One of which is Torrent Pharma as well. There's a note coming in from JP Morgan, Ekta.
Yes, absolutely. Well, they've upgraded the stock to overweight with a target price of 3,800. According to them, the India business is strong. The growth momentum is expected to sustain there. The Brazil business, there's improved visibility and a low base to support. Now, when it comes to the GLP-1 opportunity, according to them, the potential to capture more than the fair share in India lies with Torrent due to the leadership that they have in the cardio-metabolic care segment. It could add around 100 to 200 basis points to annual growth, and Brazil may benefit post the mid-2026 after the initial generic wave is done in Brazil. Financials, according to them, amongst the strongest cash flow generators in the sector, and they are on track to be debt-free by FY27. Valuations, according to them, are also reasonable. So that's on Torrent, stock up around 4%.
Okay, all right. Well, let's welcome our next guest. We have Hemang Jani, who joins us on the show. Hemang, good afternoon. Good to see you, Ben. Just a few minutes and then we'll be off for the weekend. But let's get some analysis going. Mangalam just spotted a couple of stocks. Bharti Hexacom, I think, was one name that he was talking about that spiked up. Any view on this name?
Yeah, good afternoon, Nigel. Thanks for having me. So Bharti Hexacom, I think, as a mid-cap play, we do like that. I think because of the way they have really expanded their, geographies across, the network. And the fact that the ARPU also has seen about, 16 to 18% kind of an increase. So, despite the previous 2 quarters not being so good, there is a sense that because of the geographical expansion and a better ARPU, there is going to be a decent earning growth for this year. So we do like Bharti Hexacom as a mid-cap, company, and we have about 17-18% kind of an upside from current price point.
Do you track TBO Tech by any chance? It's a recent listing. It's into optimizing travel solutions for a lot of these players. I'm not sure if you track this or not, but that's another stock which is doing extremely well. Have you seen it?
No, Mangalam, not looked at that one.
Okay. Right. Well, Hemang, wanted to quiz you on Narayana Health. Just look at the way that stock has moved. It's up around 9% today as well. It's up 78% year to date. It seems to be firing on all cylinders. Give us a sense in terms of whether you would approach it, positively from current levels. Is it a buy?
Absolutely, Ekta. I think while the pharma sector was not doing well, healthcare as a space has done relatively better, and Narayan Healthcare is actually the best performing stock within that particular pack. I think primarily because of the fact that you have seen that the company has expanded into newer geographies. Also, the operating performance has been relatively better than some of the other ones. So I do think that if somebody is looking at 18-20% kind of earnings growth for this year, Narayan would still give you a decent upside. And apart from that, we do like Max Healthcare, which again reported a reasonably good set of numbers. And Apollo Hospital, definitely the performance was good, but I think the valuations are on a much higher side. So Max Health and Narayan are the two companies that we prefer within the healthcare space.
Right, Hemang, I think there's another smaller name, Uptown, that you track, and they're going to be considering a scheme of arrangement, I think, in the next week itself. It's one of those stocks that's moving on very, very large volumes. Any view on that name?
Nigel, there is some sort of an arrangement wherein the company will be merging the West Reality Private Limited, 25 West. And once that is done, there is going to be a significant increase in their overall the realization, by about 7,500 to 8,000, because that particular project is in Bandra near Mount Mary, and the realization there is on a much higher side. And the total area could be around 6 lakh square feet, which can be expanded to about 8 lakh. So almost about 8,000 crore kind of additional revenue can be achieved once this particular arrangement is done. So which is why we are seeing action in Uptown, and we think that there is a case for a 25-30% kind of uptick in the stock even from current price point.
Interesting. Actually, from the last year's high, it's still sharply lower. But as Hemang is saying, he believes there is good upside from year on as well. One of those stocks that initially, had a lot of promise and then lost its way a little bit. But Hemang says maybe they're getting their act together as well.
Nigel, I'm just looking at the paint stocks once again because we've been discussing this through the day right now, and now they've seen another fresh wave of buying. So look at Asian Paints, that's moved to the high point of trade, and Berger as well has moved higher. They said that they are not worried about this new development in the industry, and we listed out factors as well which could do well for the paint companies. The fact that demand environment is looking a lot better, they're now better equipped at handling competition. At the same time, valuations are a lot more compelling even as crude prices are lower. So these stocks, all of them flying away in trade today. With that, I think we'll slip into a short break. As we do that, some good news for our viewers. India's business news leader now just a click away. So if you've missed any of the coverage that we've done on all the big news pieces today, you can get it on the CNBC TV18 app. You can get instant access to breaking news, in-depth article, all the updates coming in from the financial world at your fingertips. You can download the CNBC TV18 app from either the Apple Store or the Google Play Store, or just scan the QR code, which is there for you on the screen.
Welcome back. Well, a lot of stocks which are buzzing around. We still have with us Hemang Jani to talk about a lot of the stocks towards the close of trade. Well, Hemang, just wanted your thoughts on a couple of these banking stocks. You know, Punjab and Sindh is showing a good uptake. It's up around 7.5% at this point. On a week-to-date basis, also, it's not done too badly. How would you approach it?
Some of the smaller banks, can do well given the fact that you're seeing some kind of a stabilization in the spreads now that the rate cut is behind us. But our sense is that, some of the larger private sector banks are better placed. If somebody is looking at not ultra large cap, but, something like a Federal Bank, definitely we think is, much better compared to going in for a smaller PSU banks or, very small banks, because whenever you see some sort of volatility in the interest rates or there is a bit of a slowdown, these banks can go through much larger de-rating. So more comfortable with the larger names like Federal Bank at this point.
Okay, more comfortable with the larger names like Federal Bank at this point. We did touch upon Torrent Pharma. That stock has seen an upgrade. Its target price, according to JP Morgan, is 3,800. How would you approach it?
I think some of these stocks have gone through a bit of softness for an extended period of time, partly because of the tariff concerns, partly because the US business was not really showing much of a traction. But now there is a sense that you will see, slew of product launches. Coupled with that, the possible impact of tariff may not be that bad. So I do think that Torrent Pharma, Aurobindo, which also has a significant, contribution of business coming from US, should do well because the stocks have corrected. Their quarterly numbers and the guidance also continues to remain good. So we are quite positive on that space.
Okay, all right. Any views in terms of what earnings season could look like? Starts July 1st is on Tuesday. What's your sense in terms of what the first quarter could look like?
So early days, I think the previews are still not over, Ekta, but see, it's not going to be materially different from the previous quarter. I think, particularly for banks, it will be a bit soft quarter because, you will have a small impact of the, spreads which will come under pressure. But overall, we think that the aggregate earnings growth we had last quarter was about 4 to 5%. And this quarter, again, would be something very similar. But a quarter after that, when you have a better impact of the better liquidity, lower interest rates, flows which are there. So probably we will have one more quarter where we will see a slightly better earnings picture.
Okay, all right, Himang. Well, we're going to let you go on that note. Thanks very much for joining in and giving us all of that perspective for today's day of trade. Well, overall, it turned out to be a session which, was positive for us, and the momentum has in fact continued for the past couple of days for us. So we have the Nifty, which is up around 86 odd points. We have the Midcap Index, which is up around 176 odd points. The Bank Nifty, which is gained around 0.3%. The Small Cap Index also has done well. The story really is not only about today, it's about the entire week, because we had the entire Israel-Iran situation really ease off. We had crude prices which declined this week. So that really played out in terms of the Nifty and the Sensex and that relief rally that we saw for our markets. So on a week-to-date basis, that's probably what's more important to see. We had the small cap index outperformed entirely. So almost around a 4% gain for the small cap index. We had the Nifty, which was up around 2% on a week-to-date basis. It's the second consecutive week for the Nifty in terms of a positive closing, and the mid-cap index up around 2.4%. The advanced decline ratio positive for today, but overall we also had the India VIX on a week-to-date basis, which declined significantly, giving you a sense that the market seems to be back into the buying zone and is more confident about the lack of volatility and maybe a little more stability for the market.